Saving for a big purchase can seem challenging, but with the right strategies, it's absolutely possible. Whether you're planning to buy a new car, a dream vacation, or even a home, having a clear plan in place is key to reaching your goal. In this video, we'll walk you through some highly effective tips and strategies to help you save efficiently, stay motivated, and ultimately make that big purchase happen without breaking the bank. Saving for big purchases can feel overwhelming, but with the right strategies, you can break down this process into achievable steps. The first and most important thing to understand is that planning ahead is crucial. You can't expect to save a significant amount of money without a plan in place. Set a clear goal, whether you're saving for a new car, a down payment on a house, or even a luxury vacation. You need to define exactly how much you need and when you need it. This helps to create a sense of purpose, which in turn keeps you motivated throughout the saving process. Once your goal is clear, it's time to evaluate your current financial situation. This involves taking a deep dive into your income and expenses. Be honest with yourself. Look at where your money is going each month and identify areas where you can cut back. A lot of people are surprised by how much money they spend on non-essentials like eating out, subscriptions, or impulsive online purchases. Tracking your spending will give you insight into these habits and help you find areas where you can start saving immediately. Now that you've analyzed your spending, it's time to create a realistic budget. A budget will serve as your roadmap, guiding you toward your savings goal. Start by listing all your necessary expenses, such as rent, utilities, groceries, and any debt payments. After that, allocate a portion of your income toward your savings goal. The key here is consistency. Even if it's just a small amount, putting money aside regularly will add up over time. Automating your savings is a smart move. Set up automatic transfers from your checking account to a dedicated savings account. This way, saving becomes a priority, not an afterthought. Speaking of dedicated savings accounts, it's worth opening one specifically for your big purchase. Keeping your savings separate from your day-to-day spending account will help reduce the temptation to dip into the funds. Consider a high-yield savings account for this purpose. These accounts typically offer better interest rates, so your money can grow a bit faster than it would in a standard savings account. To maximize the growth of your savings, it's worth considering various investment strategies that can give your money the chance to work for you. Investing allows your savings to potentially grow at a faster rate than traditional savings accounts, helping you reach your financial goals more efficiently. One of the more conservative yet dependable options for saving toward a big purchase is investing in bonds. Bonds are essentially loans you give to governments or corporations, and in return, they pay you interest over time. Government bonds, such as U.S. Treasury bonds, are considered low risk and offer predictable returns. They can be a reliable choice for those who prefer stability and are uncomfortable with the higher volatility of the stock market. Corporate bonds, on the other hand, offer slightly higher returns but come with a bit more risk. By investing in bonds, your principal amount stays relatively safe, and you can earn a steady income through interest payments. This makes bonds a great way to grow your savings while minimizing risk. Just be sure to match the maturity of the bond with your savings timeline. If you're saving for a purchase that's 5 years away, for example, choose a bond with a similar time frame to avoid needing the funds before the bond matures. For those with a slightly longer time horizon and a higher tolerance for risk, investing in a diversified portfolio of index funds or ETFs, exchange-traded funds, can be an excellent way to grow your savings. Index funds and ETFs track specific markets or sectors, offering exposure to a wide range of stocks without the need to pick individual companies. Over the long term, stock markets tend to grow, and by investing in a diversified fund, you can benefit from that growth while reducing the risk that comes with putting all your money into a single stock. For example, a total market index fund will give you exposure to the entire stock market, which can help balance out the ups and downs of individual stocks. The key here is diversification, which helps manage risk. If one sector is underperforming, another might be doing well, thereby smoothing out overall returns. This strategy is especially useful if your big purchase is several years away, as the stock market tends to yield better returns over the long term. Another great investment option, especially if you're saving for a long-term goal, is real estate. While purchasing physical property may seem out of reach when you're saving for a big purchase, there are more accessible ways to invest in real estate without having to buy a home. Real estate investment trusts, REITs, allow you to invest in real estate without the hassle of managing a property. REITs own and operate income-generating real estate, such as commercial properties, apartment buildings, or shopping malls, and they pay dividends to investors. These dividends can offer a steady source of income, and over time, the value of the REIT can appreciate, giving you capital gains as well. Real estate tends to have a lower correlation with the stock market, which means it can provide some diversification to your investment portfolio. While REITs can fluctuate in value, they generally offer solid long-term growth potential, especially for those who are several years away from making a big purchase. If you're looking for a more hands-on approach to investing, consider peer-to-peer lending platforms. These platforms allow you to lend money directly to individuals or small businesses, cutting out the middleman, like a bank. In return, you earn interest on the loan, which can provide higher returns compared to traditional savings or bond investments. While peer-to-peer lending does come with risk, there's always the chance the borrower might default. Many platforms offer tools to help spread your investments across multiple loans, thereby reducing your exposure to any one borrower. This type of investment can be particularly appealing if you're looking for regular income to supplement your savings, as you'll receive monthly payments from the loans. Just be sure to do your due diligence and research the platforms and borrowers before committing any funds, as this can be a more complex and risky strategy compared to traditional investments. For those who are more risk-tolerant and interested in the growing field of technology, investing in cryptocurrency could be a potential way to accelerate your savings. Cryptocurrencies like Bitcoin or Ethereum have seen significant growth over the past few years, and while the market is highly volatile, some investors have been able to achieve substantial returns. The key to cryptocurrency investing is understanding the risk involved. Prices can swing dramatically in a short period of time, so it's important not to invest money you can't afford to lose. However, for those who are comfortable with the volatility and have a longer time frame, cryptocurrencies offer an opportunity for high returns. Many platforms also offer interest on cryptocurrency holdings, providing an additional way to grow your investment. It's crucial to do thorough research and possibly consult with a financial advisor before diving into the world of crypto. Storing your assets securely in a digital wallet and staying updated on market trends will also be important steps in ensuring your success in this type of investment. These investment ideas give you the opportunity to grow your savings faster than simply letting your money sit in a traditional savings account. Whether you prefer the stability of bonds, the diversification of index funds, the potential of real estate, the hands-on nature of peer-to-peer lending, or the high-risk, high-reward world of cryptocurrency, the key is to align your investment strategy with your timeline and risk tolerance. Cutting back on unnecessary expenses is important, but there's another side to the equation: increasing your income. Look for ways to bring in extra money. This could mean taking on a side hustle, selling items you no longer need, or picking up extra shifts at work. The more you can contribute to your savings, the quicker you'll reach your goal. And don't forget about unexpected windfalls like tax returns, bonuses, or gifts. It's tempting to spend these, but if you put them directly toward your big purchase, you'll be surprised by how much progress you can make. It's also helpful to break your savings goal into smaller, more manageable milestones. For example, if you're saving $10,000 for a down payment on a house, set mini goals at $1,000, $2,500, $5,000, and so on. Every time you reach one of these smaller targets, take a moment to celebrate. These little victories will keep you motivated and make the larger goal seem less daunting. While you're saving, be mindful of lifestyle inflation. It's easy to increase your spending when your income goes up, but this can derail your progress. Instead of upgrading your lifestyle with each pay raise, try to maintain your current spending habits and funnel the extra income into your savings. Another useful tip is to track your progress regularly. This doesn't mean obsessively checking your savings account every day, but it's helpful to review your finances on a monthly basis. Are you on track? Do you need to adjust your budget? Tracking your progress will help you stay accountable and make any necessary changes to your strategy along the way. If your big purchase is still a few years away, consider low-risk investment options to grow your savings faster. For example, some people choose to invest in bonds or mutual funds to give their money a bit of a boost. Keep in mind that investing comes with risks, so it's important to weigh these against your time horizon and risk tolerance. As you get closer to reaching your goal, avoid the temptation to splurge on other things. It can be frustrating when it feels like you've been saving forever, but staying disciplined during these final stages is crucial. Keeping your eye on the prize will help you cross the finish line without setbacks. By taking control of your finances, cutting unnecessary expenses, increasing your income, and automating your savings, you can make that big purchase happen. It's all about balance and finding a method that works for your lifestyle. Saving for a big purchase doesn't have to be stressful. By setting clear goals, tracking your spending, and staying consistent, you can make your dreams a reality sooner than you think. Thanks for watching, and don't forget to hit that like button and subscribe for more smart financial tips. If you have any questions or need more advice, drop a comment below. We'd love to hear from you. Keep working toward your goal, and we'll see you in the next video.